Okay, boys, let's come to the second session on chapter 22. I'll try to keep this under 15 minutes, but we have quite some topics to cover. Now, the session covers mainly page 5 to page 7 of the notes I uploaded. So the focus will be on effects of taxation, examples of different types of tax, government expenditure, etc. You can see right here. So let's start off with effects of taxation. Now, most of the time, the exam will set questions like, oh, okay, what can the government do in achieving certain economic goals? For example, if the question is asking about achieving income equality, or what we say equity in chapter 14, then the government should adopt a progressive tax. Now, explanation is pretty straightforward and almost you can say standardized, because progressive tax, the average tax rate increases with taxable income. That means the high income group will be paying relatively more as tax, more of their income as tax as their low income group. Okay, once again, say the high income group will be paying relatively more proportion of their income as tax compared with the middle or low income group. Proportional tax has no effect on income equality or equity. Regressive tax will make the situation worse. Once again, the explanation straightforward, because the low income group will be paying relatively a higher percentage of their income as tax compared with the high income group. Now, remember, when you do comparison, say, for example, when you're talking about progressive, regressive tax, who is paying a higher proportion of their income, you have to mention both parties. Don't just say, oh, okay, the high income group will be paying a higher percentage of their income as tax. Well, because you're doing a comparison, you are saying something in a relative term. So you must have a target for you to compare. Don't just say one side, okay, they will be paying more. Well, compare with who? You know, it's like in Cantonese, 我高啲。喂，你高啲，你高過邊個高啲先得㗎？Well, I'm taller. Well, you have to have somebody to compare with. Otherwise, your sentence doesn't make sense. Okay. The next focus will be on why GST, the general sales tax, sometimes called goods and service tax. Why would GST widen income gap? Oh, simple, because GST is mainly a type of regressive tax. That means, once again, the low income group will be paying relatively a higher percentage of their income as tax compared with the middle or high income group. Okay, now next one on working incentive. What if the government increased the salary tax rate? Well, still remember this term, the disposable income salary tax affects disposable income. Disposable income drops. There are two possibilities actually. For the low or middle, even to the middle income group, they may work harder in order to maintain their standard of living, okay, in order to survive or maintain standard of living. But on the other end, for the high income group, they may end up work less. The working incentive may drop because they have more than enough to survive. So you tax me, well, I just take life's easy. Okay, so two possibilities. Now, on investment, there's one big misconception here. Well, investment, when you increase the profit tax rate, it is net profit. Profit means revenue minus cost drops. So therefore, the investment incentive, your I in GDP, will drop. Your investment incentive will drop. However, it will not increase. It will not increase the cost of production, because when you have profit, all costs has already been deducted. Then you have profit. Then my tax is on your profit. All costs gone already. But I don't know why many people got this in misconception, saying that, oh, okay, increase profit tax rate, therefore the cost of production will increase, the seller will try to increase the price of the product. That is nonsense. Okay, consumption pattern. Okay, which type of good will consumers buy? Simple. If you put a sales tax on a certain type of good, for example, in the past, the government levied heavy tax on leaded gasoline, which do not exist nowadays. Okay, this will discourage people from buying or using leaded gasoline or leaded gasoline cars. Another example, still practicing today, cigarettes. I put a sales tax on cigarettes, raise the price of the cigarette by a big margin, so this discourages people from smoking. Number 5, resources allocation. Okay, so less will be allocated on items that the government put a tax on. Okay, so this will drive the allocation of resources. They will produce, government producers will tend to produce goods that are not being taxed. Okay, now examples of taxes. Now you need to know this. Please refer to page 6 for further details. I did not put down everything here. They will show up in MC questions. Okay, the following are examples of direct tax, indirect tax. Now you can see direct tax in Hong Kong is, well, pretty straightforward. Not many types of direct tax in Hong Kong, mainly profit tax, salary tax, property tax. Okay, but for indirect taxes, there are tremendous amount of indirect taxes, VAT, stamp duties, rates, vehicles first registration, airport departure tax, etc. So please go through that thing. Okay, government expenditure. Now, be very careful. Government or public expenditure is not the same as G, government consumption expenditure we did in GDP. For example, social welfare is a type of public expenditure, or you can say government expenditure, but it is not government consumption expenditure. Social welfare is a type of transfer payment. It's not calculated in G. It's not under G in GDP. However, it is out of, say, the government budget, the government spending as well. So be very careful. Do not get these two confused. But say the similar part, I would say, is the whether the recurrent on the or the non-recurrent one. Government or public expenditure, we have recurrent one, for example, salaries, etc. Non-recurrent ones, same, spending on capital goods once and for all of a sudden you need to purchase something, etc. Okay, the public sector. Now, why do we need to mention public sector? Well, how do you measure the public sector? Simple, by this one formula, G over GDP times 100%. Now, in the past, during the colonial government, the public sector in Hong Kong is relatively high, it's more than 20-something%. But in the past 10 years, the government tried to cut it down to 15 or 17%. Now that means the government has less involvement in the economy. Now the public sector, the size of the public sector is significant in the sense that if you have a high rate of involvement, your figure is 23%, 25%. That means more resources are actually under the government's control. So it's going towards a planned economy, a command economy direction. Well, that is not exactly good if you say are trying to promote market economy. Okay, so that means you have less economic freedom. Most of the resources are, or one-fourth of the resources are still in the hands of the government. But if you have more or less 10%, that means there are lots of private involvement in the economy, your degree of economic freedom is much higher. Okay, that is the important thing you need to know about. So impact on government expenditure. Well, the government is spending money on this. Well, how will this affect the economy? Well, for example, if the government is spending a lot of money on social welfare, which our government is, that is why the Gini coefficient, the raw Gini coefficient, is quite significantly different from the post-tax and post-transfer Gini coefficient. And many people try to say misguide people by just showing the raw Gini coefficient. Okay, that is something that I guess we covered in chapter 14 already. I'm not going to go over it again. So social welfare helps to just spend a lot of money of transfer payments, social welfare, the needy one, the less fortunate one. You help to narrow the income gap. You raise the standard of living for the low income group. Target is always the low income group. The middle income group is the group that the government always ignore. So the government can spend money on creating jobs. Okay, so in that sense, that will lower the unemployment rate. It will also increase the income for the low income group. If you're unemployed, you don't have income, then you have to be in the low income group, right? Okay, so it increased the income of the low income group, also help to narrow the income gap in the coming future. This one, we covered this already in chapter 17 and 18. If the government spend a lot of money on education, especially tertiary education or training as well, so you improve the quality of labor. The quality of labor, that means your production capacity, I hope you still remember this term, production capacity will increase. And that means your LRAS, your full employment output level, your potential output level, your long-run average cost curve, your long-run average supply curve, aggregate supply curve, my goodness, long-run aggregate supply curve is going to shift right. All right. So finally, government budget. Well, what is the budget? Now, budget is a planned, special emphasis on this one. This is planned. That means this is never the actual thing. This is never the actual thing. And take the example here in Hong Kong, the actual revenue and expenditure 100% deviate from the planned budget by a huge amount. Always the case, because, well, we can't predict the future. Okay, so 3 types of budget: surplus, deficit, balance. Pretty straightforward. Surplus, that means your planned revenue is greater than your planned expenditure. Balance, more or less the same. Now, need not be identical. It cannot be identical, but more or less the same. Planned expenditure is more or less the same as planned revenue. Okay, now, however, this is worth mentioning. I'll mention this again or more in the next session. Now, what's funny is that the balanced budget probably will create the effect of a surplus budget as well. Why? It's more like an expansionary effect. We'll cover that in session 3. Now, finally, be very careful. Budget surplus means your actual revenue, the money you indeed received by the government, is greater than the actual expenditure. It's never equal to surplus budget. Surplus budget means your planned. This one is the actual. So don't get these two confused, and never use it wrong. Never use it wrong. Be very careful. Okay, so much for this one. See you in the next session.